All right. Someone asked me, what are you supposed to do with your money? Because, stuff is losing value, like stocks. Take, for example, like a Range Rover, the expensive Range Rover Sport was like a couple of years ago was just over 100 grand. Now it's over 200 grand. So I'm just saying, where do you put your money so it doesn't lose value? And when I say now that Range Rover is 200 grand, it just means if you have $100,000, you could almost buy that Range Rover, and now you can buy half of the Range Rover, right? So the money loses its value. So you got to find places to put the money. So I want to go with my answer to that question was, I'm not a financial advisor, I'm a real estate agent, and if the numbers make sense, they make sense, and this is how the numbers make sense. Say you got 100 grand and you don't know what to do with it, right? I'm not talking about like maybe first time home buyers, you might have 100 grand, but I'm talking about, say you got 100 grand and you don't know what to do with it. You can find like a 1-bedroom condo that's barely over 100 grand, have the tiniest mortgage payment, and then rent it out. Say that leaves you with $500 extra every month. Say your mortgage payment is $500 and you rent it out for $1,000, right? You got $500 every single month that this thing is paying you, and then you can upgrade it at the end of the year. If you're collecting $500, at the end of the year you'll have $6,000. You can upgrade it, and you can write that off because you spent the money on it. As a business, of course, you can spend $6 grand to make it better, keep Wi-Fi, to furnish it, whatever you got to do just to get the price to go up, and then you just charge a little bit more rent. It's just, I think that's the easy way, because you can go, I think U.S. Treasury bonds, I think they're at about 4.5 or 5%. So if you give them 100 grand, you're going to get $5,000 a year. So if you divide that by 12, you're going to get like $400, like $40, let me see, no, 5,000, about 400 and something dollars a month. So it's something. But with the real estate, it's getting paid down every month. So after 30 years, that 100, 200 grand that you paid for it, now it's free and clear. You don't owe that much. Plus, it's probably going to be worth more. So instead of the 100 that you paid for it, it's probably going to be worth 200 grand. Collected that money every single month. The debt on it, you don't know it anymore. So that's another 500 after 30 years, of course. And then the value of the asset goes up. So to me, that's what makes sense. And that's how I would answer the question. Say I got 100 grand and I don't know what to invest it in because I think the stock market is going to crash, or because you don't think maybe you buy gold and you don't think gold is going to go up that fast, which gold probably might go up. You don't want to keep it in cash because after a couple of years, that cash loses its value. Just like, I don't know, 10 years ago, you could buy a 20-ounce Coke for $1. I don't think it's less than $3 now. So I'm just saying, if you keep your money in cash, it's going to lose it. And that's how I would answer the question. That's what you would do with the money. You would put it into real estate. You don't have to buy it. It doesn't have to be $1 million house, because then if you buy $1 million house, put down 100 grand, you still owe 900. Most of it's still going to go to the interest rate. But you can just look for something real simple, like a 1-bedroom condo, 2-bedroom condo or something, and just throw 100 grand at it. Have a really small mortgage. Put a renter in there. The renter will pay your mortgage and plus, shoot you a couple $100 probably. This doesn't apply to every single property. If that's something you want to do, just hit me up. Tell me what your situation is, and maybe we can come up with a game plan. Tuesday.com, TOOSDAE.com, and let me get back to building this motor.